All right, so we're going to do our Millionaire Club financial health check. This is a good one, and so get ready. This will be very lengthy and very detailed because that's what these are about. These are not just general high-level stuff. This is going to be nitty-gritty into the detailed situation. So overall, I need to show you kind of the situation at hand and kind of what's happening right now. So first things first is if you ever submit one of these, just remember name, email, phone number are not going to be shared. So do not worry about that. It's sensitive information. We will not ever share any of your information. All of your documents will be titled something different because your name might be attached to those. So we are very, very well aware of all that stuff. And so with that being said, let's break down the situation that we have today. So we have a 33-year-old single individual that is a bartender making $100,000, phenomenal income, does not have any children. Now, I do want to call something out because, and we'll talk about this as we go through, but I'd be very careful ever listing yourself as a 20 out of on a 10 scale. So the question is, on a scale of 1 to 10, how confident are you about your overall financial picture? And we put a 20. I hope that's a typo because we want to be very careful. And in fact, we have a lot to talk about, my friend. And so for someone to put a 20 on what we have to talk about, I'd be very careful having overconfidence. It often leads to disaster in the financial world. So I want to be careful about that and also call that out because I want to protect you guys and help you guys not let you go down a bad path. So on a scale of 1 to 10, how are we feeling about our mindset around money? A 10, phenomenal. How much cash do we have on hand? 19,000. That does not align to the balance sheet. So that's issue number one, is that these documents should all correspond with each other. And there's a lot of things that aren't aligning amongst each other. I'll call those out amongst the presentation, but we got to be really careful because when people don't fully understand how to use this systematic approach to finances, things get really murky really fast because if a lack of an understanding might result in a massive error. And so we got to make sure we know what these financial statements are, how to utilize these financial statements, and how they go together for the bigger picture that we're trying to accomplish with our goals. And so which brokerage firms do we use for investments? Let's talk about this one. So I have a great YouTube video on Robinhood as to why not to use it. N1's okay from my understanding. Revolut I've not had any experience with, so I can't speak on that. But Robinhood is funny because typically, watch my Robinhood video on YouTube and you'll understand this, is that they are predatory and they have a lot of bad press around them and they target young novice individuals. And going back to the beginning is young novice individuals often overhype themselves and have overconfidence. Remember when I was 18 years old? I do remember that. I was an 18-year-old idiot. And so a lot of young guys specifically are targeted with a good income that are young, novice, and that is the target market for Robinhood. Just so you know, that's not my opinion, that's a fact. Watch the YouTube video if you're curious. So what I don't want to make the conclusion or draw the conclusion of is somebody that did a 20 out of a 1 out of 10 scale. I hope that was an accident. But I would be very careful, and I want to call it out because it's very important to understand this concept, is that Robinhood is going after the people that don't need to be using Robinhood. There's a reason I wrote The Roadmap to Financial Freedom, A Millionaire's Guide to Building Automated Wealth, a national bestseller from a CPA's perspective, is I want to simplify money. I don't want to overcomplicate money, and it shouldn't be overly hard, but I also wouldn't even say I'm a 20 out of 10, not even a 10 out of 10 when it comes to confidence about financial picture in general. And that's coming from somebody that's actually financially free and teaches about this all the time. There's always something to learn. So to have an overconfidence also leads to destruction. Oftentimes I see this happen. I've seen this happen one too many times, and often with the males, that younger males on the younger side, typically this happens with. And that has a lot to do with personality, ego, maturity levels, and all this kind of things. And that's no shot at men. Love you guys, but I've been 18 before. And so I think it's very important to call this out. Somebody that did put a 20 that is using Robinhood, I see a lot of people online that act wealthy, talk a big game, but they don't have much to show for it. So be very, very careful. How much do we currently have in retirement assets? $150 is my understanding. Of your retirement assets listed, how's this allocated? 0. Obviously, I'm assuming it's just like 1. So it should be 150. Technically speaking, you should have allocated 150 somewhere. How much do you currently have in non-retirement assets? $8,000. That also does not align with the financial statements. Lots of errors already from a presentation perspective. So we want to make sure we understand this. How do we represent this summary page versus our financial statements? Of course, they could be submitted at different times, different time zones, or whatever the case is, or just depends. Of non-retirement assets, where do we have these listed? Crypto and small cap. Very concerning. We have already, to summarize, 20 out of a 1 to 10 scale confidence level. We're using Robinhood. We only have 150 in retirement, but we have a lot more in cash and crypto. A realignment needs to occur. And so now we're investing in crypto, small cap cryptos, which are even riskier cryptos. From my understanding is at least what I'm seeing, very small cap. And I've seen that in the balance sheet, and we'll talk about that in a second. The good thing is we're investing $2,000. The WTF is, why are we trading half of it? You aren't going to get rich by trading your money. Think about this logically. If I buy an asset and I sell it, I'm only getting money on the profit of the buy and sell. That's not how you build wealth. You have to take the asset, buy the asset, hold the asset, and hold it for a long period of time so it appreciates and you actually get wealthy. That's how I've gotten wealthy. That's how everybody in history has gotten wealthy. They buy assets like businesses. They buy assets like the stocks. They buy assets like real estate. They hold it for a long period of time. They do not trade. Trading, along with Robinhood, along with crypto, is disastrous. On top of that, $1,000 into a high-yield savings account. Nothing wrong with that inherently. However, we're going into the vehicles that aren't going to build us wealth. Now, high-yield savings account by no means is an issue, but coupled with the other issues at play, it shows me there's a huge misalignment we need to focus on. How much currently do we have in non-mortgage debt? $7,000 almost, and all of that is credit cards. There are charge-off counts. There are no interest. I do not care. There are credit card debt. There are crypto accounts. There are cash savings. There is zero retirement, zero investments of any sort. Let's continue down the pathway. So how much insurance do you have? What are the coverages, et cetera? Critical illness, accident, hospital indemnity, dental, vision, voluntary life. That's $30,000 only, which is not enough. That's per paycheck, I'm assuming. And so HSA, bank dependent care reimbursement. So here, guys, there's a massive opportunity to have the right insurances. And so there are 8 typical, let's call it 10 insurances that we could be looking at. There are things that we're missing here. We're going to go over the details as to what we're missing. And then if you look at the bottom, we have no tax planner. We have no financial advisor, and we have no estate plan. So let's put it this way. We can go through the steps that we want to talk about today, but we definitely need a tax planner for the most part. And this is not a preparer that somebody that does your taxes every single year. This is somebody that plans with you about your situation, how to optimize your taxes, a tax strategist per se, not necessarily an H&R Block or somebody that just does your taxes, right? So that's a very significant relationship you should be building as you build wealth. You're going to need that at play. Financial advisor, I'm very comfortable not having. I think that's a smart decision. However, an individual like this would benefit from that in a big, big way for many different reasons of the direction they're headed. But we're going to fix that today. And then lastly is the estate plan. Now, I know there's no kids, and I don't know if there's, it looks like we're single with no kids at this point in time. So there might not be a need necessarily for this, but that's something to definitely consider down the road. So I want to call that out. And then those are the Excel documents. So let's jump into what I would do. What are the steps to consider on this specifically? So the first thing I want to look at is the balance sheet, kind of do an assessment of things. And of course, we have the no-namers, okay? So there's no names being shared here. But if you look at the net worth allocation over here, we have a $25,000 net worth, and I think, if I'm understanding, this is the most up-to-date, because if I look at the dates, and I think I'm making reference for April 21st, we had the I think it's August 3rd, and then we also have 8/10, August 10th. And I'm assuming this is the most up-to-date, so this would be $25,000 is my net worth, okay? So if I look at the cash position, we have $13,000 in cash. We have $17,000 in crypto. We have zero, I mean, let's call it $40 in a, looks like it's a Robinhood account, which we'll get rid of. But we have $0 in an HSA, any retirement accounts or non-retirement accounts. That is the area of opportunity in a massive way. Zero child assets wouldn't make sense because you don't have children, totally fine. Vehicle, I think it's reasonable. I mean, $16,000 vehicle, It's pretty reasonable. Looks like you have $15,000 liability on it. And then we obviously have the credit cards that we talked about. If I'm looking at this situation, I look at it as barren. I look at it as directionless. And I think, and if that's even a word, but I think we're on the wrong path. And so in order to build wealth, we need a complete reversal of what's happening right now. And if we do that, we will be in a good position. We do not want shit coins. That is not what I wrote in there. That is what I was provided. Shit coins will not get you wealthy. And if I have to explain why, you're in the wrong place, okay? So shit coins aren't going to get you wealthy, and cash is not going to get you wealthy, and neither is cryptocurrency. And I'm on the record saying I do invest in Bitcoin, I do invest in Ethereum, but that is step 8 of my program, and that is a very, very lengthy discussion as to where that falls in the bigger roadmap of things. But let's just put it this way. Pretty much when you're financially free or have all of your boxes checked, all your ducks in a row, all your T's crossed, all your I's dotted type deal, but that is not the situation here. So crypto should not even be on the radar. I also saw Forex in the picture as well. We'll talk about a big no-no. That's, again, we're trading and we're not investing, and that's not how we're going to get wealthy. As you can see, the one-time expense, so if I go to your budget specifically and I look at your expenses starting in this month begin, and they are specifically $4,700, $4,710, and you can see the list of everything here. I think in general, your budget looks pretty solid. I think there's definitely some room for reality in there that I don't think's actually there right now. We'll talk about what we could potentially add here, but I don't think that $4,700 is crazy. For a single person making $100,000, I think that's really reasonable. I think you're doing a hell of a job from a budget perspective. However, from looking at this, it seems as if there might be some misalignment. So number one is that you're investing crypto in EFTs. They are ETFs, not EFTs. That's an electronic funds transfer. This should be zero because these should be going on basically your investing, saving, and investment section over here, right? So therefore, this should be zero, and that should be moved there. But let's say without that, we have 4210. 4210 per month is not a lot, especially when rent is basically your 50% of that. So 4210 or 2100 divided by 4210, we're looking at 50% is rent. And that's still a reasonable rent because I did a summary adjustment of this, and it looks like your rent's 23% of your average take home over the last, so many months. So I basically took your average income, fixed income plus variable income, that's 9,100, and I took the 2,100 divided by this 9,100, and you are right at 23%, which is a great rule of thumb to be within. I always say 25% or lower your take home. So you're perfect. You're on the money, on the dot right there. That's awesome. However, let's look down below. I think the groceries and the eating out, 400 and 400, I don't want to say it's too little, but I'd be curious to see what you're actually spending. Groceries, 400 projected. We spent 543 here. But eating out on the reverse end was less than 400. You're pretty good there. April, we are at, I don't know how you're eating. Personally, it looks like it's actually in line. As long as it's reasonable. And again, it's situation to situation. However, in June, it says 400 and 400, which makes me wonder if these are accurate numbers because there's no chance of there's $0 on the end. And that goes for all of these here. So I want to be careful that these are even accurate numbers because they're all zeros on the end, which make me think these are estimates and not actuals. These tabs are called actuals for a reason. You do not guess on your actuals because if you guess, you're going to guess what you estimated, and there's never going to be a true picture of your finances. So that is a big red flag for me. When I look at this, my guess is there's a lot of estimations. Now, the everything else I'd say looked pretty reasonable. However, the miscellaneous I think is fine. But I do think that we should come up with an additional, line item, something like, discretionary or, a slush fund, whatever you want to name it. Typically what I'd like to do here is one, discretionary if you just want to go spend on something like nothing that you necessarily want to plan for. It's like, hey, this is just free money. But it's part of my bigger picture and it doesn't get me away from my goals. And then also the other side of things is like the slush fund. If I go over in any categories, I want something to protect me outside of my emergency fund. So I also don't live like so tight. I can like live life. And like, I think where people go wrong with budgeting is they put these like smallest possible estimates in their categories, and they always mess it up, and they spend over that, and then they get disappointed and they quit. You're setting yourself up for failure if you do that. So build a slush fund. Give yourself an extra $250, an extra $500. Everybody's situation is different, but give yourself extra money in case you go over, so you're not feeling guilty. Also be reasonable about these different categories. But all in all, I don't have a whole lot to say. These are it's pretty bare. I would assume there's more to the picture than what I'm seeing, especially with additional one-time expenses being nothing. I did see this $100,000 prop firm challenge, and when I Googled prop firm challenge, because I did not know what that was, I saw a thing I don't like, and that had to do with something along the lines of trading. And that would make sense based on what I'm seeing, and I think that's a very dangerous game to get into. But again, you've heard my take, and again, this is not the Bible, but I will say that this is not going to help you long term. Trading will not help you, no matter what online guru has told you otherwise. And so as I go through here, I see that. I also see, can't tell you what this is. 5% or 60K funded. I don't know if you're getting paid from this. It looks like you're getting paid from something here, but I don't know what that means necessarily. I'm assuming it has something to do with the trading below, but they're two different things. So I can't really speak to that. And then I see down here, the emergency savings is getting very, very, basically filled very quick, which is good, but we skipped some months. So we're not being consistent and all the months are different, and we don't have an automatic plan that tells me. So we have a massive improvement ability here for automatic savings, automatic bill pay, automatic investing, which you do not want to manually do. I also see that we're 109% to our emergency savings goal. So I don't know if we intentionally did that or decided over. But then on the other ones, we haven't really adjusted for these, and they're all zero for the most part. So I'd be curious to see kind of what the true plan to hit that is, given it's August. And we have a lot of 0% progresses on things that really matter, like the IRA, the taxable brokerage, and the HSA, things that actually are going to move the needle and help you. Emergency savings is definitely important. However, if you look at your actual emergency savings, I always say from a cash perspective, I want 1 to 2 months in my checking, and then I want 3 to 6 months of fixed expenses in my savings. And so if I look at this and really change that to 4210 because you have that $500 extra that should have been going to your investment side, we have 4210 would be 1 month, 8420 would be 2 months. So let's call it $4,000 to $8,000 in your checking account roughly. Would be a good rule of thumb. And then savings, I would say 3 to 6 months of expenses. So let's call it $13,000 to $26,000 sitting in your emergency fund, plus your slush fund that you have. Now you're fully funded from a cash perspective, but you don't want to continue to save for no reason. Unless there's a sinking fund, like a house fund down payment or something like that, there's no reason to save after you're past that. But you're not at this point because you're at $13,000. However, we have $17,000 in crypto. So when I'm looking at the balance sheet, we have a major misalignment. We have $17,000 in cryptocurrency. That is our largest asset on the balance sheet. That is also 17 divided by 25 in total. That is 70% of our net worth at this point in time. I want to be very careful about thinking that's going to get us rich. I will give you perspective. I have my big bets, speculative things like Bitcoin, like cryptocurrency, which I don't have the cryptocurrency. I have Bitcoin specifically and a little bit of Ethereum. And I have private equity deals, and I also have some real estate. The real estate's outside of this percentage. But between my private equity deals and between crypto, we have about 2.5% of our total net worth in those types of deals. Those are big swings that could potentially be awesome, but I'm not building my foundational wealth with those things. I'm taking the chance on those things with a calculated risk and a calculated speculative bet, but I'm definitely not trying to build wealth because those things are going to go up and down and you're not going to build real wealth long term. And so we want to reverse the angle of shitcoins. We want to reverse the angle of whatever the staking is, a 68% APR. We need to be real about this. You're not getting 68% APR without major risk at play. So we're playing games with our money and we aren't in the position to do so whatsoever. And so let's go down to here in the summary, and here's some practical things I would be taking into consideration, steps to consider. So the first thing I would do is consider the cash that you have on hand to pay down your debt. So You have cash of 13,000. You also have cryptocurrency. So when I say consider your cash, I really mean consider your cryptocurrency, which I consider is very liquid. And I would consider paying off the $6,000. I do not care that it's a charge card. I do not care that you're not paying any interest. It's a credit card and you're playing with crypto. That is a fire waiting to happen and spread throughout the whole entire neighborhood. And so I want to be very careful about thinking that's a good approach. It's not. And on a scale of 1 to 20 or 1 to 10, having a 20 confidence in playing this game tells me there's a lot of risk being taken on, and I'm going to play a game. And that is a game that does not typically end well. And I tell the truth, and I don't try to sugarcoat this. I would totally reverse direction here. So that'd be my first thing. Consider cash to pay down debt. My second thing is focus is very off base for building wealth. So I say directionally impaired, kind of in line with what I just said. We have, going back to the beginning, we have Forex, we have crypto, we have trading, we have cash. Those things are the things I talk about not building wealth. The things we don't have, business, stocks, real estate. Those are the things that build wealth. So we have a major misalignment. So if we keep heading this direction, we're not going to build wealth. There's no like maybe we will, maybe we're going to hit the lottery in crypto. It's not going to happen. We have to reverse our cash flow on our budget. So the cash flow down here, which we'll get to in a second, needs to be going to our goals, which should be business assets, stock assets, real estate assets, traditionally speaking. Now, the third one is zero-based budgeting. So there's large variances up here, and that tells me there's not really true zero-based budgeting. All of this income that you have right here in these first two lines, fixed income plus variable income, should equal zero after reducing out fixed expenses, variable expenses, one-time expenses, and savings and investments. So all my income should go somewhere is what I'm saying here. And this should be equaling zero in a perfect scenario. If there's a deficit, that just means that you're pulling from your cash balance over here because that's the only place you can get it. Or what could potentially be happening is if you can't afford it, where do you go if you don't have cash? You go right here, which we have credit card debt, which kind of tells the story of what's happening. And so that's the first thing. If we have a splurge, a green, that's not necessarily good either because that means we're not aligning our cash in the right buckets appropriately, efficiently. And so if we're missing a ton of potential compound interest, and I'm going to show you guys the math behind this. So if we have $7,000 on average that we're misaligning every single year in the 8 months. So, turn that to, let's call it roughly, if we stay on the same pace, about $12,000 a year. $1,000 a month is what we're not capitalizing on average. And again, this is an 8-month period. I don't know if that's the case long term, but if that is the case, this is what we're missing out on. And this is what people don't understand is the opportunity cost loss of inefficiencies. Let's say you really truly don't have $1,000 going to the right direction. It's like sometimes it's coming out of your cash, sometimes it's not. It's just all over the place. Let's say we start with $0 and we invest $1,000 a month. We get actual real returns over 30 years. So we get historical market returns. We don't play crypto games and stuff like that. We would have an extra $2 million by a simple realignment of the cash flow you already have in your own picture right this second. That is a $2 million find over a 30-year period by doing very fundamental stuff and just noticing trends and understanding the sheets that we will operate and what are the outputs of what we're getting. What's the story that it's telling us? And it's telling us that we're inefficient with our dollars. And if we realign those dollars and get into good quality assets such as HSA, taxable brokerage, retirement accounts, we will then change our life in a 30-year span by $2 million. Sounds like a plan to me, but that's up to you guys, obviously, if you want to take that approach. That is always a very good idea for me. So the second piece is that. And then the other piece with the zero-based budgeting is down here is I did an analysis of what your expected fixed and variable expenses are versus what you actually spent. And it looks like there's there's two greens, but you're like kind of break even for the most part of those months. But those months that are red, man, there's a pretty significant difference of 6,100. So that means, kind of going back to our expectation, we are not appropriately preparing ourselves for reality. There are things that are off. And that's not to mention that there's a lot of things that are zero rounded up. So it tells me that not only are we inefficient, but we're also just estimating this game. We're not actually putting actuals in here. So it could be more, it could be less. I don't know. But that's something to be considering. We always want a zero-based budget. We always want every dollar to have a home. Super simple stuff, but the efficiencies there will save you about $2 million alone. And kind of back to what we talked about, limited truth on the spreadsheets. There's a lot of things on here that don't really tell me what's really going on. And I think there's a lot of misalignment. But if we realign this stuff with what I'm saying, I think it's going to be huge. And I'll give you a good example. So in the month of, let's call it July, let's just say an average month. Okay. So an average month is $9,100 in income. I will do an average month in your expenses as well. So average true expenses. I'm going to take out your August because August is not fully done when I'm recording this. It's $2,000. So I know it's not in line with the average of $6,200. And then let's do green here of green. And then let's do red. And then let's say your average expense, one-time expense looks like it's a fixed $500 every single time. Let's see what you actually have left over. So we have this minus that minus this. We have $2,300 left over before we save, before we invest, before we do anything on an average month. That is exceptional with the potential you have. When we just talked about the $1,000 a month, if you just realign the bottom cash flow, you actually have more when you really look at the average month of $2,368. So we talked about a $2 million gain. Instead of 1,100 or 1,000, we're going to do $2,368, which I think was the number exactly, $2,368. Yes. So if I have $2,368 available and we realign where we're putting this money, that difference over 30 years now becomes something much more substantial, $4.6 million. We're not playing crypto. We're not playing Forex. We're not playing all these games. We're not going to put money in cash. We're going to follow the roadmap to financial freedom. We're going to follow the millionaire's guide to building automated wealth. We're going to automate this entire process. We're going to automate your expenses, your debt pay down, you could really pay that off today, your investments, and we're going to realign where your investments go. And we're going to change your life by near $5 million just off the rip without even adjusting for other things that we could be talking about or meeting with me and talking more in depth. The focus should be adding to retirement and non-retirement. It's very clear. The direction is impaired, and if we realign that with retirement, non-retirement, you will crush life because you make good money and you have such an opportunity. The next piece, number 6, is moving investing line to investing section and treat it as an investment. That's what we kind of talked about here, that $500. This is investing. That should just go essentially here in the savings and investment section. Nothing crazy to talk about, but just from a spreadsheet perspective to understand that. So I will make that green. Now, one thing I was really impressed by specifically was your education expense, which shows me that you're very serious about getting educated. Now, I would just say, let's educate on the right stuff. Let's not do Forex, crypto, et cetera, stuff like that. But this is an incredible thing to have. I can't tell you how many people I see that have education expense always seem to be a lot more successful than those that look at it as a big issue or a big problem. Spend your money, invest your money in yourself. Education's a big thing. Very, very impressive. And then we talked about this. Moving away from crypto, Forex trading would not make you wealthy. I don't need to explain that. A lot of people are going to argue that. I don't really care. You won't be wealthy with that. So it's just an honest truth. And the last thing I looked at was your insurance. And I think there's a lot of opportunity here. It looked like most of it was through work. That's a big no-no and a big risk, actually, in fact. And so things that you're missing right now are life insurance, term life insurance, auto insurance was not listed. I'm sure you have it, just wasn't listed. Long-term disability was not listed, or it was through your work. ID theft protection is massively important, especially we just had this Social Security data breach. There's all sorts of issues with ID online criminals. That is not something to underestimate. It's pretty rampant. And then lastly is an umbrella insurance policy to kind of cover everything. There is a lot of risk in a situation that is not being covered right now. And so I can't tell you how much this will save you in the back end if something does happen, but it will. Like tons of money I can't really put into numbers necessarily, but these aren't things you just skip out on or do a quick $30,000 policy through your workplace. You got to be really careful because it's not usually enough. Or if you get let go from service, all of a sudden you're not insured, and then it becomes a major issue. And as you get older, insurance premiums get more expensive typically because of the bigger risk typically. And so you got to be very careful about that. So all in all, I like to give the honest truth here is we have a lot of realignment to do in general. However, I showed you the exact steps to take to realign stuff. And so lastly, I'm going to open up one more thing and show you how to open up any of these accounts. So an HSA would be through your workplace. So you'd have to go directly through your workplace, at least generally speaking, to start. See if you have a high deductible health plan. Number one, you have to have that high deductible health plan, insurance plan. If you do, you may or may not have an HSA through work. So that's where you go for the HSA. Now for retirement assets, there's two ways. 401k might be through work. You're a bartender, so I don't know if they W2 you or they 1099. I don't know how that really works, to be honest. If you are W2, obviously you probably have a 401k through work. If you do not, what I highly suggest if you're 1099 is to do a solo 401k. And so you can open this through anywhere. I have a pretty good location to open this at. It's right here in the initial thing, is Carry Solo 401k. Solo 401k provider, phenomenal. I use Solo 401k or Carry for Solo 401k. That's a great place to be. So I would start there. That's obviously just directly in the welcome message in the referral links. Pretty cool stuff. One of the big things is the other thing would be like an IRA, probably a Roth IRA at your income limit. So going to Vanguard.com for this would be the first step. And so all I would do here is personal investors. And this step would be the same for Roth IRA. And what I'm going to say next is taxable brokerage. I'll show you the two different locations, but it's really Vanguard.com, personal investors, products and services. You go under accounts and plans. You have IRAs here and you have brokerage accounts, the taxable brokerage account here. So that would be an HSA through your work, 401k through your work, hopefully. If not, you can also open a solo 401k through here, small business retirement, or Carry solo 401k like we talked about. Highly recommend Carry over a Census because Vanguard doesn't actually have a solo 401k plan anymore. It's bought out through a Census. And then lastly, you could do a Roth IRA through Vanguard and a brokerage account through Vanguard. And if you bring this and wrap this back all together, that covers this big hole right here, which is when I see someone's net worth pop off, it's usually right here and it's also right here. And right now, if you look at what's going on, we have zero real estate, we have zero stocks, and we don't own a business or have any business interest or any private equity. So we need to realign this. And as long as we realign it, you're making the money to make this happen. That's the cool thing about this. So making the steps to make sure your credit cards are paid off, continue to pay down the vehicle. You take the cryptocurrency, you stop, you halt, and you move the cash and you move the cryptocurrency into actual cash flowing assets long term. And that is how we're going to turn this around and make a massive impact. Like I told you, it's about a $5 million impact if you do things right over the next 30 years, that is. And that's a decision you guys have to make. But I am here to help. I'm here to tell the truth. And I'm here to expose what is happening in the financial industry every single day. That if you guys fix it and you guys follow the roadmap to financial freedom, you guys will get wealthy. It's a process. It's a very proven process, and it just takes commitment. So hope that helps, and let me know if you have questions in the comments below.